Hello, everyone. I wanted to give you a quick update about the general gold and silver market, talk a bit about inflation and interest rates. As we all know, inflation did peak uh, exactly 1 year ago and is falling on a very steep slope, um, and that gave the Fed the occasion to do a pause or a skip, as they call it, to skip rising interest rates. Although the general market thinks they're gonna increase the rates again next month, there's a 72% probability that they will raise with another 25 basis points at the next meeting, which uh, even though the probabilities looks high right now, I don't think they will. I really don't, because inflation is coming down. The price of oil uh, is pretty stable right now. If we go on a daily chart, it's been pretty stable for like 6 months, and oil drives up inflation. As you can see, inflation peaked here in June last year, and then it came back down. Nothing affects inflation more than oil, in my opinion. So if oil doesn't go up, inflation will not go up. Of course, unless the government starts sending out stimmy checks again. But if they don't, inflation should come down. And uh, yeah, not only that, but the M2 money supply red is also coming down. And this almost never happened, right? So if we go by the idea that money supply goes up, inflation goes up, then we should also uh, follow the same principle. If money supply goes down, then inflation should go down, maybe even deflation. Maybe we'll not get deflation, depends on how fast it goes down. But at this rate, I think we're just gonna get lower inflation. So prices will still go up, but at a lower rate. So with that in mind, I don't think the Fed is gonna raise again because inflation is coming down. And if we look at the longer term table, yes, they are pricing in like another rate hike. I don't think that's gonna happen, but we'll see. I think we'll stay here and come like the end of January 2024, we might start. I mean, we might. The market foresees rate cuts. Now, why is that? Probably because the market foresees a recession coming. Because the Fed will not cut rates unless there is something really bad happening in the economy. So yeah, that's my general view about the inflation and um and interest rates. Now, is real inflation maybe double of what the government is admitting? Yes, but the government looks at its own data, right? So technically, interest rates are as high as they were back in 06, 07. And what did the Fed do once they paused. Did they raise again? No, they didn't. That's why I do not expect them to raise again. Like every single time they paused, with the exception of the 79-81 period, if they pause, they don't really raise again, right? They first do a cut and then they raise. So I'm expecting like this period was from June to August. This period here was from December to June, like 6 to 12 months of no activity. So it fits pretty well with January 2024, right? When they should be starting to cut. Why should they cut? Well, because the yield curve is heavily inverted, right? The 2-year yield government bond is 1% higher than the 10-year. And we should see this happening. Maybe even at a steeper rate, right? By the end of the year, this should be like January. We could see this happening. Or something like this. Why? Why is that? Well, because usually the recession comes when the yield curve uninverts, so it goes positive again. And we can check that fact by going back in the 2000, right? When the yield curve uninverts, there's when you get the recession. When the yield curve uninverted back in 07, that's when we got the recession, right? So we don't get the recession when the curve inverts. We get it like 12, 24 months later when the curve goes positive again. So with that in mind, I think it would be a good idea to have a nice stack of cash. Keep your core gold and silver positions, of course. Although in every single recession, gold and silver dropped a bit, but they recover. Like this is the 2020 recession, and this is 07-08, right? Gold actually dropped 30%. Silver, how much did it drop? From 08 to the bottom, 56%. So they don't really hold value, their nominal value during recessions. That's a fact. All right, that's a fact. They do drop, but now you're not gonna care if you buy the metal. You would care if you buy the SLV or the GLD or miners or stuff like that. But if you buy for the core metal position, this doesn't matter. And by the way, most likely prices of physical silver here, like market prices with premiums and everything, were the same as here. Because, like, obviously I was a child in 08, but I remember the 2020 crash. Where was it? Here, right? It crashed from $18 to like 12. Were you able to buy silver coins at $12? Like, let's call it with premiums, $15 an ounce? No. They were the same price as they were here. And if I remember correctly, you sorry, you had to wait like 2 weeks, 3 weeks, 1 month to get your silver. So for silver coins, gold coins, if a recession comes, you don't really care. However, you should have a good cash position, because everyone should have like an emergency fund, have 6 months of spending at least, you know, in order to survive, because you might lose your job. Then what? Are you going to sell your silver? Are you going to sell your gold? No, I don't want to do that. I don't want to do that. I want to keep my silver and gold for the long term and spend my cash for short term trouble. Right. S&P is back to being severely overvalued. Nasdaq, same thing. This is what I'm expecting it to do. Maybe it would be something even more dramatic, let's call it. But this is what I'm expecting. Now, could it go higher? Of course. But that doesn't take the fact that the market is severely overvalued, right? So right now I'm not buying stocks. I'm gonna correct myself. I'm not buying the Nasdaq or the S&P. If I am buying stocks, I am buying what I value as undervalued stocks, something like that, right? But that's a story for another video. So I would not be right now. I would not be surprised if silver goes down even further. As we can see, we dropped below this kind of long term. This is a weekly chart, by the way. This is a long term resistance trend. We did break above it back in March. We closed above it. Silver price got rejected at this $26 mark, and now it came back down below this resistance. I was expecting it to hold support. It did hold a bit over here, like the end of May, but right now we had two weekly closes below it. So we'll see. It did held support at the, I think this is the 200 weekly moving average. Yes. So it is getting squeezed a bit here, but I would not be surprised if silver goes back to this $21 per ounce. But from here to 21, if you have the cash to exchange fiat for some real money, I don't think that's a bad idea, in my opinion. But I would not go and buy silver miners, gold miners, because this is a risk in the short term. And usually in September, everything goes down, right? August, September, everything goes down. That's historic. Has to do with harvesting. Everyone goes on vacation in August, so they spend their money in vacation, and then they are busy with harvesting, with the harvesting cycle, and yeah, usually markets go down from August to September. So wake me up when September ends, right? Okay, that was my general update for the market. I hope you got some information from it. If you did, please leave a like to the video, leave a comment, your opinion. If you agree or disagree, let me know, and maybe consider subscribing. It does really help. Thanks for watching, and I'll see you next time.